One of the areas where a lot of people have done really well in New Zealand in particular, but in a lot of other places in the world like Australia, Canada, UK, and the US, is in the area of property investment. And one of the reasons why it's quite successful is because you have two things going on all at once. You have increasing demand generally for a finite supply of properties because there's only so much surface area around the world, right? And so you do have a competition that goes on, especially if you have a general long-term trend of population growth. Now, in the West, we don't have a lot of natural population growth, but we do have a lot of immigration, which can then increase the demand for that underlying finite bit of land. So property investment works really well because of the increasing demand that occurs over time. But not only that, one of the other reasons why property investors do well isn't because of the increasing demand on property, it's because of the decreasing amount of value that the currency can contain. What I mean by that is if you were to buy a $1 million home, not only do you have people that are competing for that property over time, which drives up the price, higher demand, higher price, but you also generally will be borrowing most of that money from the bank. Now, the bank's money that they give you is what we call a nominal loan. So that might be an $800,000 loan. That's all you ever have to pay back to the bank. And so, meanwhile, your property is rising in value, but the amount that you've borrowed stays the same. What is really happening is that the currency is being debased. The currency is being debased because of what you just did. In fact, all of us as individuals, when we borrow money from the bank and when the government borrows money from the bank, we're all contributing towards monetary debasement through this credit creation process. So, in the act of doing that and then taking the money from that to buy scarce assets like property, we're actually creating this self-fulfilling prophecy, or we could call that maybe even a Ponzi scheme, where we do well as property investors. So one of the ways that we can protect ourselves from the thing that we're benefiting from the most, which is monetary debasement through the credit creation process, is by hedging ourselves by owning a non-monetary asset. Now, I know this sounds a little bit complicated, right? But when you own a property, if you want to realize the gain from that property, you have to sell the property and translate it back into fiat currency. When you own a monetary asset, which isn't converted necessarily into fiat currency, you are hedged against continual monetary debasement. That's what gold and Bitcoin can do because they are money in and of themselves. So, as a property investor, it's really important to have a small allocation towards non fiat based investments or other investments that can convert to value outside of the fiat financial system. That way, you can still benefit from the depreciating value of our currency and the appreciating value of our land that we're owning as property investors, whilst being protected from a severe systemic failure that ultimately has to occur at some stage. Cryptocurrency is a type of digital asset or something that's valuable that exists in a digital form. Bitcoin is a monetary example of a digital asset. We're currently going through a digital transformation in all areas of life, and it might be occurring with value or with money right now in the case of Bitcoin, but it will inevitably extend into everything that we consider valuable. Once things exist in digital format, it's possible to do things with the units of ownership in ways that we weren't able to do before. For example, units of ownership in your property, in your home. If that was tokenized, if that was turned into units that were traded in some sort of digital asset ecosystem, then you can now fractionalize a property. Why is that relevant? Well, that opens up the door to help sell portions of your home to fund yourself through retirement when you don't really want to sell all of your property. So it's kind of like getting a reverse mortgage, but using a type of cryptocurrency. For someone just getting started out in cryptocurrency, it's a really good idea to do a bit of research. For me, when I first discovered Bitcoin, when I first had to learn about it, I was doing a podcast. And so I had to force myself to actually learn about it. And I spent a few hours trying to get my head around it. I still didn't really believe it had value, but it led to a deeper understanding for what it really was, not what I thought it was. What did I think it was? I thought it was just a bunch of made up baloney. It was nothing. Somebody just made up this thing that exists on the internet. How could that ever be worth anything? But as my appreciation grew, it was about the community of people who all decided that it had value. It wasn't valuable because our government said it was valuable. It was valuable because the people said it was valuable. And that's what created a bit of a light switch moment for myself. So, as you're first getting started with cryptocurrency, the first thing is to put some time into it to genuinely understand what it is. The second thing I would suggest is that you do some degree of formal learning. Now, it doesn't mean you have to go to university or anything like that, but there are loads of courses that you can now do online, which give you a really good fundamental understanding. You could take the Crypto 101 Crypto with Confidence course, link is in the notes. That's just one example, though. You could do some other courses that are far more detailed if you understand and appreciate some of the computer science behind it. But it's really important to do some level of research before you take it too far. And then the last thing that I'd recommend is that you would seriously want to consider getting some advice around how to incorporate cryptocurrency into your own investment portfolio. Now, this is where you might find that the person that you're speaking to doesn't necessarily agree with the crypto thesis. That's okay. It's not the point. The point is that you've gone through an investment decision making process which exposes yourself to some criticism to stress test what your beliefs are. Because it's really easy to get stuck into a rabbit hole, and it's almost like you're getting indoctrinated into a cult when you're learning about crypto. So it's really important to challenge that as you are learning about it so that at the other end of it, you make a decision based on process, not based on emotion. Often, when you're investing in Bitcoin, the question comes up of how much should you be investing? And this is a personal question that kind of comes down to what it is that you're trying to achieve and over what time frame. But if I were a 35-year-old and I was looking ahead maybe to my retirement at age 65, well, that's 30 years away. That's a long time away. And even an investment of just $10,000 can do a lot over a 30-year time frame. Because if you can be a determined long-term investor with Bitcoin in particular, the risk and return profile really starts to shine the longer you forecast this out. But if you allow for a 15% rate of return, even just $10,000, that's it, invested for 30 years, can turn into about $830,000. It's significant, but that's why only a little dabble do you is probably the best principle to follow if you're considering how much Bitcoin to include into your own portfolio. So if you're just starting out as an investor, you might want to have that percentage as a relatively high amount of your net worth because you're just getting started. But as you buy a home and maybe buy a rental property and invest more in traditional investments, that percentage of Bitcoin relative to everything else might become smaller, maybe. But over the long term, there's a general principle that the higher the return that you're after, the more volatility or the bumpier the ride will be on the way to getting that return. So if you just have a small allocation towards Bitcoin today, that's possibly all that you would need to consider. Of course, this isn't financial advice, and of course, you can do what you want, including going all in, becoming irresponsibly long, becoming a Bitcoin maxi. All the power to you. That's awesome. However, do your own due diligence and make sure that you've considered the pros and the cons associated with any investment strategy.